When most investors think of the Izmir Central Business District, they picture a small cluster of glass towers tightly packed into Bayraklı. This diagram shows the actual active development axis. The true new city center stretches far beyond a single district, covering the continuous route through Çınarlı, Salhane, Halkapınar, and Turan. The southern boundary now pushes deep into the urban transformation areas sitting right behind the traditional Alsancak port. This increase in available land supply has diluted the exclusivity of the traditional center. In a market this broad, a CBD address is no longer a guaranteed proxy for high rental yields. Value here is driven by operational quality and exact building classification, rather than relying on a Bayraklı postcode to do the heavy lifting. To evaluate properties in this expanding market, commercial real estate expert Ümit Birkan developed a rigorous classification framework. This 5-tier hierarchy separates the market from A-plus Landmark Plazas at the top down to older C-class stock. To reach that A-plus tier, a building must pass an expert evaluation, scoring 60 points across technical, parking, and management metrics. If you buy or lease in the wrong tier for your target demographic, you immediately create financial friction. Overinvesting leads to a cash bleed from premium monthly dues you don't need. Underinvesting leaves you with a property facing zero corporate demand due to failing technical infrastructure. Securing a positive return on investment means your location on the map has to perfectly match your target tier on this spectrum. At the very top of the market are the A-plus Landmark Plazas. These are the iconic, high brand value structures of the region, like Folkart Towers, Mistral, and Ege Perla. Achieving this rating requires heavy technical execution, multiple high-speed elevators, centralized VRV climate control, massive parking capacities, and expansive Gulf or city views. The trade-off for owners is steep. You pay absolute top-of-market purchase prices and commit to the highest monthly operational dues in the city. Those extreme operating costs intentionally filter the tenant pool, restricting your viable lease market to multinationals and flagship corporate headquarters. Moving one step down brings us to the A-class tier, heavily concentrated in the rapidly developing Çınarlı and Salhane zones. These buildings drop the requirement for iconic skyline-defining architecture, but they still mandate high-end modern infrastructure, strong security, and professional management. They deliver strong corporate appeal and high rentability, allowing investors to capture premium tenants without paying the inflated landmark financial penalty. However, they lack the sheer symbolic prestige required to attract foreign companies looking for a trophy address. Because the initial capital requirement is lower, the A-class tier generally offers faster sales liquidity than the highly exclusive, low-turnover A-plus market. Purchasing in either A tier guarantees infrastructure quality, but it firmly locks your asset into a specific, large-scale corporate demographic. Directly adjacent to the major government hubs, heavily clustered along the Monserolu and Adalet axis, are the B-plus plazas. These are well-maintained or relatively new buildings with smaller independent sections, offering only mid-level technical standards. For investors, these properties function as highly liquid assets that carry very reasonable monthly dues. Demand here is driven almost entirely by local professionals, lawyers needing proximity to the courthouse, medical clinics, and independent financial advisors. The primary compromise is infrastructure. You sacrifice large-scale parking capacities and comprehensive security services. Those specific infrastructure deficits mean B-plus spaces cannot support large corporate tenants who require contiguous floor plans and guaranteed parking blocks. At the bottom of the market sits the B and C-class stock, typically located in older Bayraklı neighborhoods and the traditional Alsancak office district. These are older structures featuring converted apartment-style layouts, aging mechanical systems, and weak or entirely absent reception services. Their single competitive advantage is cost. They offer a deep rental discount, keeping them viable for highly budget-conscious local businesses. But the structural penalties are severe. They suffer from low sales liquidity, zero corporate demand, and crippling daily parking shortages. Moving down the tier list lowers the entry barrier and increases trading speed for small investors, but it thoroughly eliminates your ability to secure major corporate leases. This visual maps your specific business requirements directly to the correct CBD outcome. If your goal is prestige and a large corporate footprint, the data directs you straight to the A+ and A-class buildings along the Bayraklı and Çınarlı high-rise axis. If your strategy prioritizes rapid investment liquidity and small business leasing, your capital belongs in the B-plus structures of the Adalet and Montserrat zones. And if maximum budget efficiency is the overriding metric, look to the B and C class stock in older districts. A profitable real estate strategy in Izmir requires you to diagnose your exact user profile before you ever look at a map. For corporate tenants, the directive is clear. Do not compromise on technical infrastructure. You need to absorb the premium in the Çınarlı and Bayraklı axis to secure the parking and VRV systems your operations require. For yield investors seeking a quick turnaround, avoid the vanity trap of an A-plus landmark. Direct your capital towards smaller B-plus units to maximize your market liquidity. For developers and landlords, recognize that long-term property value relies heavily on strict operational quality, not simply the prestige of the surrounding neighborhood. The market enforces an immediate penalty for cutting corners. Poor building management and imbalanced dues will instantly downgrade an asset in an A location into a B-class property in the eyes of buyers. Ultimately, modern commercial real estate value in the Izmir CBD is a calculation of building class, operational management, and targeted user profiles. The location provides the stage, but the technical score determines the final return.